As of the first week in June of this year, average median income limits have increased across the nation to unprecedented levels, giving home buyers like you more leverage and buying power when looking to buy a new home. Hey everybody, my name is Ian Moore and I'm a loan officer here with Premier Mortgage Lending. Welcome to More About Mortgages. Please, if you haven't already, make sure to like and subscribe. I would greatly appreciate it, and always will continue to provide you guys with up-to-date mortgage information on lending and real estate in general. In this episode of More About Mortgages, I'm going to be talking about the new AMI, or average median income limits, here in 2022 that were just set and went into action in the first week of June. This has completely changed the game and the levels of qualifying ability for you folks out there looking to buy a new home that can now use some of these specialty programs through Fannie Mae and Freddie Mac where you wouldn't have qualified before because your income was too high. Average median income is what Fannie Mae and Freddie Mac use to determine eligibility for certain programs like Home Ready and Home Possible. Home Ready and Home Possible are first-time home buyer programs through Fannie and Freddie conventional loans that require as little as 3% down, and they have sort of discounted interest rates and PMI premiums, or private mortgage insurance premiums. So it can essentially give somebody more buying power, more leverage, and give them a higher purchase price when they're looking for a new home. In order to qualify for these programs and fit into that box, you have to have an average median income at or below the qualifying threshold, which up until the first week of June in 2022, depending on your area, the Federal Housing Administration and HUD in general has over 2,600 established areas where they do the average median income for. So out of those 2,600, only one stayed the same, only one dropped by a small amount, just a very minuscule amount, and then I think out of the other, it's like 2,603 areas increased in the average median income now used in 2022 and beyond for home buyers like yourself, or homeowners looking to potentially refinance and take advantage of Fannie Mae and Freddie Mac's specialty programs, Home Possible and Home Ready. We're actually going to take a dive into their loan lookup tool here through Fannie and Freddie to show you guys some examples of what's changed and how this change can help you as a consumer looking to buy a new home. So the easiest way for me to explain this to you guys is going to be just to show you. And in order to show you, I can use Fannie Mae and Freddie Mac's area median income loan lookup tool, which is a great tool that we have at our disposal here as loan officers through Fannie and Freddie. Freddie is a little bit more up to date with the recent changes in AMI compared to Fannie Mae, who hasn't updated their website yet. So it's actually kind of neat because we can see what the old average median income limits were compared to the new average median income limits and what the differences are. So for this example, I used 33 Main Street in Boston. I don't even know, where that is located, for instance, but 33 is my lucky number, and I figured every town or city has a Main Street, so I just plugged in 33 Main Street. Area median income for Fannie Mae, coming back, keep in mind, these were the old ones. 100% area median income is 117. It was 117, I should say rather. Freddie Mac has the new up-to-date AMIs, and it is now up to 133.3. So for Boston, that 100% area median income has increased from 117 to 133.3. 80% of the average median income is what is used to qualify for these specialty programs like Home Possible and Home Ready. And you can see right here in the box that the 80% average median income for this area in Boston was $93,600. So if you earned at $93,600 or below, you could qualify for this program. Now, 80% of the area median income has gone up to $106,640. So if you make up to $106,640, you now qualify for this program. However, prior to the first week of June, you could have made, let's just say, $97,000 a year. You didn't qualify for this. You made too much money. Anything over $93,600, you earn too much, and you would not qualify for this, discounted interest rates and discounted PMI premium. However, now you do qualify as of the first week of June, and this program could give you a lot more buying power. It could lower your PMI amount, it could lower your rate, it could lower your down payment, giving you more money in the bank to work with, and ultimately, using a program like this kind of it puts you into a better position. You know, your mortgage payment's going to be less. You're going to pay more towards pay less towards interest every month and more towards the principal balance on your loan. And at the end of the day, you know, you might get into your new home for less money down. So something to keep in mind and consider when buying a new home through a conventional loan. I'll give you guys another example. We'll use the same address, 33 Main Street. We'll try this time around in Manchester, New Hampshire. So 33 Main Street in Manchester, New Hampshire. The average median income prior to June of this year was $101,900. 80% of the area median income, meaning what you could make up to or below in order to qualify for Home Ready or Home Possible, was $81,250. Now, as of June of this year, these numbers have changed. Now, I'm going to guess they probably went up around 10 to 12,000, somewhere in that vicinity, but let's take a look right now and see for sure. So 33 Main Street in Manchester, New Hampshire, 100% median income, $114,500. So I was pretty close. It was $101,900, went up to $114,500. So that's up $13,000 right there per year. That now you didn't qualify for this program before, living and looking to buy in Manchester. Now you do. If you earn just slightly over $100,000 but below $114,500, you might be able to get into your new home for less money down with a lower rate and lower PMI premium. And ultimately, if you're still out there that, you know, pre-approved but haven't found your house yet, you might qualify for more purchase power and more home. So keep in mind, contact your local loan officer about this if you haven't already, guys, because as of the first week of June, these AMI thresholds have increased, giving home buyers across the country and homeowners, for that matter, looking to potentially refi, more power. And that finance power will directly result to you getting more home and a lower payment with a more comfortable, affordable monthly payment that allows you to stay in that home for as long as you need to without having to break the bank or run into any financial, you know, tight spots. So thank you for joining me for another episode of More About Mortgages. Again, my name is Ian Moore and I'm a loan officer here with Premier Mortgage Lending. This has been a More About Mortgages episode on AMI, or average median income, through Fannie Mae and Freddie Mac, and how that average median income has increased in all areas of the country and why that increase has and will help you qualify for more home. So make sure to like and subscribe if you haven't already, guys, and I appreciate you joining me for another episode. Take care and have an awesome week.